Company cars. For a long time, the offer of a company car has been a great incentive to retain and reward hard-working employees. However, in recent years, the rules regarding company cars has changed, making them less appealing to companies and employees, especially given the complexity of the current regulations. To help, I'll give a brief overview of some of the issues that businesses, employees and fleet managers may need to consider. How are company cars taxed? Company car tax, more formally referred to as benefit in kind, or BIC for short, classes a vehicle as an additional taxable benefit that falls outside of a person's standard salary. Whether you're in a traditional company car scheme or gifted a company car allowance, it's important to know how much tax you can expect to pay. Company car tax. The latest BIC rates for the financial year started on 6th of April 2021 and follow on from rules in the previous tax year, which saw several changes due to the new stricter European WLTP emission and economy tests. Emissions are key to the amount of company car tax paid, and the new WLTP tests, which replace the former NEDC tests, means that most cars on paper will have a higher CO2 emissions, meaning a higher rate of tax. The Treasury has recognised that this test may unfairly disadvantage some company car users, and so to achieve fairness, the Treasury reduced the BIC rates used for older NEDC assessed cars registered under the new WLTP system by 2% during the last tax year. This reduction has now fallen to 1% in the 2021-22 financial year and will disappear altogether next year. This means there will be no reduction in its BIC rate for these vehicles from April 2022. People looking to purchase a new company car in the next year should review the government's latest rates at gov.uk. Be aware though that these rates change annually and may differ after April 2022. Reducing company car tax. If businesses and employees review the latest company car tax rates, they should be able to determine which vehicles suit their needs and can reduce their BIC liabilities. However, while diesel engine vehicles may once have been the most tax efficient choice for many companies, these are now subject to new rules. This stipulates that if they do not meet the RDE2 element of the WLTP tests, they will be subject to a 4% higher BIC rate than petrol cars. Many manufacturers of popular company vehicles are aware of this and are producing models that meet these strict standards, so that it's possible to take advantage of the reduced tax rates that diesels incur, thanks to having low CO2 emissions compared to petrol equivalents. However, with advances in electric and hybrid technology, there may be even a more tax-efficient solution for companies to utilise. The advantages of electric vehicles. There are several tax incentives for both company car users and fleet operators who switch to electric vehicles. With generous financial incentives available, more and more businesses have either already made the switch or are given serious consideration to do so. So what financial incentives are available? Benefits in kind. Since April 2020, electric vehicles attracted zero tax on benefit in kind. This zero rate also applies to hybrid vehicles with emissions from 1 to 50 and a pure electric range of over 130 miles. Salary sacrifice. Where an electric car is provided under salary sacrifice, the optional remuneration rules do not apply. Tax bans for low emission vehicles. There are now 11 new tax bans for vehicles with emissions of 75 and below. The government has also announced a tax rate for the next 3 years, helping businesses to plan ahead. Pure electric vehicles attract zero vehicle excise duty and even avoid the supplement for cars with a price of £40,000 or more, which could save owners and businesses thousands of pounds. Capital allowance. Cars with CO2 emissions of less than 50 are also eligible for 100% first year capital allowance. This means with electric cars you can deduct the full cost from your pre-tax profits. Congestion charge exemptions. Electric vehicles are exempt from congestion charging and clean air zone charges. In addition to London, 5 cities have been mandated by the government to introduce a clean air zone, including Leeds, Birmingham, Nottingham, Derby and Southampton. If your company vehicles travel into areas where clean air zones exist or are about to be introduced, there will be cost savings for your business if you switch to electric. Electric vans. The taxable benefit for having the private use of a zero-emission van were reduced to nil from April 2021, while the previous year electric vans were taxed at 80% of the benefit for a normal van. Government grants. The government's plug-in car grant provides 35% of the purchase price up to £2,500 towards the cost of an eligible plug-in vehicle, costing less than £50,000. the plug-in car grant applies at the time of purchase and is usually given as a discount on the purchase price of the vehicle. Electric charge points and charging costs. Any business that installs charging points for electric vehicles between now and the 31st of March 2023 can claim 100% first year allowance for these costs. How can we help? Choosing your next company vehicle, whether as an individual, employer or fleet manager, can often be challenging, especially given the recent changes to rules regarding benefit in kind and the grants that are available. That is why it makes sense to seek expert guidance. To find out how our team can help you, please contact us.